In this video I will show you that car prices decreased exactly as much as expected and that there is no sign of a market crash. What's up YouTube and welcome to a new video. Now I received a ton of messages from people who requested me to research the effect of the current situation on the car prices. Now for a few reasons I was initially a little bit hesitant to make this video, and that's then also why I waited a little bit longer with it. First of all, I think that it's important to point out that there are way more important things going on right now than to figure out how the car prices are affected. After all, if you are about to lose your job, then car prices are the last thing on your mind right now. Second then, it is of course extremely complex to figure out what is happening in the market and also to figure out where the prices might be heading. You would namely need to have a good understanding of the local market dynamics for each car market, and you would also need to know where the economy will be heading. And all of this would cost me way too much time to research and also makes for a very boring video, I think. Besides that, if you look around on YouTube, you can find many videos of local car dealers describing the situation from their perspective. I did then also decide to do the same as those dealers did, and that is to show you the market from my perspective. And if you know this channel, then you also know that this is a data-driven perspective. In this video I will also show you then, based on real market data, how the prices moved in the last 3 to 6 months. But how should we approach this? The car market is of course huge and consists out of a large variety of cars. I therefore decided to pick 3 cars which I've analyzed in the last 3 to 6 months and see how their prices relate to the current prices. And I can already reveal that there's quite some variation between the models. And when it comes to those models, I decided to include a large variety of cars. I namely picked the Mclaren 570S, a car which is depreciating relatively fast, a Ferrari F430, a car for which the value should be relatively stable, and a Porsche Cayman 718, a car for which the values already suffered quite a lot. Now in the remainder of this video, we will look to each of these car markets, and for each market we will evaluate the average price movements, and after that we will figure out the change in the depreciation curve. All the way at the end of the video we will aggregate the results then and conclude. Now we will start with the 570S market, and that market is appearing right over here. And in this graph you can see that we have the model year on the horizontal axis and the price on the vertical axis. The different market dates are indicated by different colors, and the axes represent the most occurring price points. And I almost forgot, each car is of course represented by a bubble. If we looked into this market, then we can see first of all that the number of cars for sale decreased from 142 to 131. We can also see then that there's a very minor decrease for the most occurring price point, as this price point decreased from $171 to $170,000. And statistically, the price distribution of the full market didn't change in the last 3 months. If we however look a little bit closer to the market, then we can see that there are in fact some large differences. We namely need to look within the model years. It is namely so that the most common price points increased for model year 2016 and model year 2020. Now this doesn't mean that the prices actually moved up. It is simply the result of a new market composition. For model year 2020, you can see for example that the most common price for a 570S is around $10,000 higher than that it was 3 months ago. The reason for this is however these 4 new cars which are now listed. If we look then to model year 2016, then we can see that the most common price point increased with around $6,000. And this results from the fact that some cars at the bottom of the market are sold now. Now another thing which perhaps sparked your interest is this drop of around $10,000 for cars with model year 2019. This drop is however the result from the sale of these cars over here. Those were namely new cars, and in that sense the market movement also makes sense. Old inventory is sold and new inventory is added. Now if you want to figure out how the depreciation pattern for the Mclaren 570S changed, we need to insert the depreciation curves for both dates in the graph. And that is then also what I did right over here. Also note that I cleaned the graph a little bit and included only the new cars in model year 2020. The older model years do then only contain the used cars. Now the difference in market composition which we talked about earlier, we can also see back in the difference in depreciation. 3 months ago, the depreciation curve namely showed an average depreciation rate of $17,000 per year. At this point, this average depreciation rate increased to $22,000, and there are 2 reasons for this. First, like I already mentioned, the increase in new car inventory is pushing the average price for a new car up, and a higher starting point automatically means a larger drop. Second, we can clearly see a drop in prices for model year 2019, 18 and 17. Have a look for example to model year 2019. There, the most occurring price point decreased with around $6.7 thousand. Also, note that around 3 months ago, the market bottom seemed to be around $170,000. Now, however, 4 cars are priced below this bottom. And note that these are not some high mileage cars which just happen to appear on the market right now. It is even so that the 2 cars over here have a mileage below the market average for this model year. Now, the drop in price is what we are observing over here is actually quite normal. We namely just saw that the average depreciation per year is $22,000. And if we are very rough with the numbers here, and I repeat, very rough, divide this by 4 so that the period equals 3 months, then we end up with a depreciation of around $5.5 thousand per 3 months. And this is roughly in line with the value decrease what we are seeing. Note by the way that these numbers can be estimated with significantly more precision, but let's not go into that now. I namely still want to point out one interesting thing before we move on to the Ferrari F430 market. And that one thing has to do with the cars in model year 2016. First, we can see that the market here shrunk with around 60%. 3 months ago there were namely only 31 cars for sale, while now you would have the choice out of only 12 cars. And this signals of course that the demand for these cars is very strong. Also, see how the cars below $140,000 are all taken out of the market and that only 1 car is put up for sale at this price point. And this development might of course signal that the worst depreciation is over for the 570S and that values will settle between $130,000 and $140,000 for the foreseeable future. That was quite some analysis of the 570S market. And we will continue now by having a look to the Ferrari F430 market and the Porsche Cayman 718 market. We will go, however, slightly quicker through those. Also, before we continue, please remember to support the channel by smashing that like button. Now then, the Ferrari F430 market is appearing on your screen and you can see that the number of cars which are for sale is almost identical between now and 3 months ago. 3 months ago there were namely 83 cars for sale versus 80 cars now. And in those 3 months, the most occurring price point decreased with $2.5 thousand. It is then also no surprise that statistically, the price distribution for the market didn't change. And we can see a similar picture if we look to the individual model years. For model year 2007 and 2008, prices decreased between $1.5 and $2,000. For model year 2005, prices even changed so little that you can hardly see it on the graph. But look what happened in model year 2006. Here we can see a large increase in the most occurring price point. And the reason for this is again a change in market composition. There are namely a large number of cars which came on the market at around $110,000. And with this price point, they are priced quite far above the average 3 months ago. The price point for these cars is however valid. They are namely priced so high because they have a mileage far below the average. In fact, they pushed the most occurring mileage for this model year down from 24,000 miles to 15,000 miles. Now if we insert the depreciation rates also to this graph, then we can see the current rate is around $1,000 lower than the previous rate. After all, the prices in the more recent model years decreased slightly, whereas the ones in the older model years went up or remained stable. And note by the way, the most recent depreciation curve shows an average depreciation rate of $8,000 per year. However, because this is an older car, it actually makes more sense to have a look to the depreciation per 1,000 miles driven than to only have a look to the depreciation per year. So let's do that. The depreciation per 1,000 miles driven for this market is now appearing right over here. And you can see it instead of model year, we have the mileage on the horizontal axis. And if you look to the two curves, then you can see that there's almost no difference and that the average rates are almost identical at $1,273 and $1,280 per 1,000 miles driven. Now, to sum it up, I would say that this average decrease of $2.5 thousand in the market is in line with the expectations. It is namely aligned with both the depreciation per year and the depreciation per 1,000 miles. And with that out of the way, let's have a look to the Porsche Cayman market. I was namely a little bit shocked by what I found there. There is namely a huge difference between the current price point and the prices 6 months ago. Moreover, this difference is statistically confirmed, so the markets do indeed look different. And I need to add a small disclaimer over here, I only look to the 718S market. If we have a look to the market then we can see immediately that for all the model years the most common price point dropped. For 2019 cars, which tend to be almost brand new, the most common price point dropped by around $8,000. And this of course is the effect which you see when you buy a brand new car and drive it out of the dealership. After all, as you can see, a large share of these new cars are now sold. Now for model year 2018 and 2017, the drop in prices decreases. And this is of course what we could expect. After all, these cars are a little bit further on the depreciation curve. Now for model year 2018, prices dropped with $4,700, and for model year 2017, this is $2,100. Now the question is of course, could you have seen this coming? Let's have a look to the depreciation. When we looked at this market 3 months ago, the expected average depreciation in the first year was around $15,100. Now if you transform this number to a 6-month period, then the expected drop was $7,800. So yes, this large price drop is in line with the expectations and therefore could have been anticipated. Now another interesting development here is the movement in the minimum price levels. Here we can namely see some large movements. You can get, for example, now a 2018 car almost for the same price as a 2017 car. Also, waiting for 6 months in this case gives you the opportunity to buy a 2019 car for around $69,000 instead of $80,000. Now this video would become too long if we also have a look to the GTS market and the market for the base version, but I see absolutely no reason as to why the market dynamics should be different over there. So let's now wrap up this video and conclude. For all of the models, so the 570S, the F430 and the 718 Cayman, I would say that prices decreased in line with the depreciation curve. And this also means that there is no effect of the current economic situation on the prices. And a good reason for this can be that it's simply too soon. After all, we're now about 3 months into this situation, but these type of market effects simply take time to build up. For example, companies and people usually utilize their reserves first, and when this is gone, they really get into problems. And this in turn would of course really affect the demand-supply relationships in the market and therefore eventually also the market prices. Now a second possible reason as to why we didn't really see large decreases in prices can be that we're looking to the aggregate numbers. But this of course doesn't mean that locally prices didn't move. Your local dealer, for example, might be lowering the prices, but this wouldn't show up in the aggregate result. Third then, another important factor as to why we didn't really see large movements can of course also be that we're looking to the advertised prices. And dealers of course prefer to have these relatively stable to prevent a downward spiral in the market. The advertised prices, however, don't say anything about the discount which you can get on them. It might well be that in these times, car dealers are willing to give you that extra 5, 10 or maybe even 15% extra discount just to move that inventory. And this effect of course wouldn't show up in the data. And with that we arrive at the end of the video. Now if you enjoyed this video, please remember to smash that like button and to subscribe, as there's a new depreciation analysis going online every week. Also remember then to check out my already existing analysis, as you can find, for example, depreciation analysis for the Porsche GT3 and the Mclaren 570S on my channel. As always, a huge thank you for watching and I hope to see you next week.